session today. This is a 1099 e-filing overview presented by Zenwork Compliance Solutions, and we're very glad that you can join us. We've got a lot of information to share, so we're going to jump right into it. I am your moderator. My name is Geneva.
Hey everybody, it sounds like Geneva might be having some audio issues. This is Ed Pratt. Just let me know in the chat there if you're able to hear me clearly or if you're still getting the breaking up of the audio that we were experiencing with Geneva's talk track. I'm just going to keep talking here for a minute until it goes through. Okay, good. So one person said that I sound great. I appreciate that. Just checking to make sure that other people can hear me speaking as well, and I'm not chopping out every couple, 3 words there. Okay, good, good. Well, I guess I'll just run the show today then. So Geneva, I don't know, maybe you want to jump out and then try to come back in, and we'll see if that works better. But at any rate, we will just keep pushing on here. So Geneva was just welcoming everyone to the session. Thanks for joining us today. Geneva's usually the moderator, but I think I'll be moderating and hosting today. Geneva is our marketing lead, and she does a lot of our content development with regards to 1099 and other products that Zenwork offers. She's been with us for a couple of years. I'm Ed Pratt. I'm the Chief Operating Officer. I've been here for a little over 5 years now, working with Tax1099 as well as some of our other products. And I've got about 19 years, I almost got 20, I can almost update that to 20 experience in compliance overall. So I do a lot of the work. Hopefully I've met some of you in person, some of the conferences that we've gone to or spoken to you on the phone over the years, helping our clients do their 1099 e-filing process. Couple of things for CPE credit, and I have to say this is more Geneva's bag than mine as far as the CPE credit goes, but hope I don't miss anything here. We want to make sure if you want to capture CPE credit, I know this is one of our sessions that's not specifically geared towards accountants, but we may still have some who are on board here. So if you are an accountant, if you're a bookkeeper, if you need to collect CPE for whatever reason, make sure that you're staying on for the duration of the session. If there are some technical issues, excluding what Geneva had with her audio, if there is any technical issues that prevent you from completing that, then we won't be able to offer credit for the course. We're going to have 4 surveys that come up through here. I can never remember if you're supposed to answer 3 or 4, so I just always tell people to answer all 4 of them. They won't be hard questions. You should be able to do fine with them. And then in the follow-up email, Geneva will send out either later today or early tomorrow, since this is a later afternoon session. You'll get instructions on how to register and receive that 1 hour of CPE credit, so that you will get full credit for that. Couple housekeeping things. Some of you have already found the chat box there. I appreciate that, since you were able to let us know the audio was breaking up. But do ask questions there throughout the session. If your question is pertinent to what we're talking about right then in the session, we may answer it then. We may hold on to it till the end. We will have a few minutes of Q&A at the end of the session. If for some reason we don't get to a question, then we will answer that via email later after the session. We will send a recap email after the session that will include the slides as well as the recording, so you will get a copy of the slides in a PDF format. And then, as I mentioned, we'll have questions for you. Those poll questions will come up. Please do answer them, even if you're not looking for CPE credits. Just nice to have everybody participate in the session. Our agenda today, we're going to discuss some federal and some state filing compliance. So we've got a couple of different items on the federal section, and then we'll talk a little bit about where state filing is headed. We'll talk about the correction types and processes. We'll look at some vendor form delivery options. I have a couple of little known facts about e-filing. If you've been filing with us before, you may know those, but for other people, they may be a little known little known questions. And then so we'll show a couple of things about what's new in the Tax 1099 platform, as well as talk about how you can use our platform to help you out. And then, like I said, Q&A at the end of the session. So before we move into our next slide here, I think Geneva has the first survey question for us. Geneva, if you can pull that one up, I'm not sure which one is the actual slide that we want to do. But the question here is, how do you currently file your 1099 forms? You've got four options there: paper filing. You yourself file through the fire system doing an e-file. You e-file through a third party like Tax1099, and then you may not know. So you may be kind of first time here, first time learning about this sort of stuff, and so you may not know how you or your firm does the 1099 forms. So please click on an answer there. At the bottom, there's a little blue button that says Send Votes. So once you've checked your box that you want and have finished that, click on the Send Votes option, and we'll give just a little time for everyone to go through and finish that. Geneva, this would be a good time to test and see if we can hear you again.
Yeah, I'm back on. Is this working any better? Is this sounding better?
That was a little better. You
Says
still kind of faded out a little bit there as you were going, but I think that's a little bit better.
Okay. Yeah, not sure what happened there, but hopefully this will be a little bit better. And if there's still any issues, just go ahead and chat that in so that we know. Just a couple more seconds on that poll question on your screen. Okay, good. Hearing some feedback in that chat box that it's getting a little bit better. Gonna wrap up the voting here in a second. Make sure everyone has a chance to submit that. And as Ed said, if you're looking for your CPE credit here, you need to go ahead and submit an answer to this question. Okay, I'm going to end the voting here and share out those results. And it looks like a lot of you are e-filing through a third party. And of course, we hope that that's us here at Tax 1099. Some of you are still paper filing, and then there's a few that are e-filing through the fire system. So it looks like most of you have done this before. You know about 1099s. We hope that we can give you some good updated information and some thoughts on why e-filing might be the way to go this year. So with that, I'm going to pass it over to Ed, and he's going to start walking us through some of this information.
All right, thanks, Geneva. So first, we're going to cover a few things that are new on the federal side. There's a new e-filing requirement for information returns. We'll talk a little bit about that. There's some news on the Form 8809. That's the extension, specifically pertaining to Box 7 and W-2s. And then there's a little bit of instruction for filing late Box 7 1099 miscellaneous forms, just as the IRS is kind of still working through how they pulled the date forward for the filing. First, we're going to talk about aggregated 1099 or information returns. I'd say 1099 because that's most frequently what I deal with, but this would include W-2s as well. But this is what they're calling a proposed regulation. We kind of haven't gotten the final official word that they've made this final and official. The proposed regulations do state for any form filed after December 31st, 2018, which would mean forms filed in January for the 2018 tax year. But this is the application, or this is the rule that the IRS has made. They have said in the past you could file up to 250 forms on paper. So if you had 249 1099 miscellaneous forms and you had 150 1099 dividend forms, you could file those each on paper and you'd be okay with that because they were neither one hitting that 250 threshold. Now, though, the IRS is aggregating those information returns together. So that's your 1099s, your W-2s, your miscellaneous, your 1098s, all of those forms. they're aggregating together under your payer. And so if you do file, let's say 150 W-2s and then 120 1099 miscellaneous, you've got 270, and so the IRS is going to look for that to be an e-file. Again, don't want to scare anybody because this is just a proposed regulation at the moment, but we have seen them come in and kind of push those proposed regulations into being at the last minute in the past. So if you're on this call already, then you're probably thinking about e-filing no matter what. You can e-file no matter how many forms you have. So down to as little as one form. If you want to e-file that, then you certainly can. This is talking about the minimum threshold for the requirement of e-filing, and so they are either aggregating it this year or moving towards aggregating it. We kind of have a theory that the IRS is looking to start being more rigorous about enforcing folks to e-file, and so they're kind of going to gradually move that threshold downward, and this would be the first step. You can kind of see a progression where they aggregate all your forms together, and then later they say, okay, well now it's 100 forms aggregated, and later they say it's 10 forms aggregated. So you can kind of keep seeing how they might push that down and down as they kind of go through the years. Moving on to Box 7 extensions. So Box 7 is the NEC, the non-employee compensation. That's what you typically are paying vendors who you're hiring instead of hiring on an employee. They come in to do computer programming for you. Or they come in to build your shelves in your bookstore, or whatever you're hiring those folks for. The Box 7 extension has been an automatically granted extension in the past. So no matter what, you could request 30 additional days of time to send your forms to the IRS. Whether you were sending them via paper or you were sending them via e-file, you would be granted that 30-day extension automatically. As you're probably aware, a couple years ago, the IRS moved the filing date back for the 1099 miscellaneous Box 7 and the W-2 to make that a January 31st filing deadline for both paper and for e-file. It had previously been February 28th for paper and March 31st for e-file. Now, because of the act in Congress in 2015, in an effort to avoid fraudulent tax refund dispersals, the IRS moved that to January 31st. And then now this year, they're taking it a little bit further. They're saying we're only going to give an extension for your W-2s or your Box 7s if you have some special circumstances. There are safe harbors that the IRS has created to let you still claim that 30-day time of extension. Now, the 30 days does only apply to the IRS filing. You still are required to get your vendor copies, your employee copies out the door January 31st, but this 30 days would still potentially be available for the safe harbors. Now you have to do a manual form for those, a manual form meaning a paper form to send that in. And on the 8809, if you just go look that up on the IRS website, you can see what those are. The first one is federally declared disaster areas. So you can think of those as, California wildfires, East Coast hurricanes, anywhere that the federal government has declared as a disaster area. You would be eligible to receive that additional 30-day time, as that being the first of the safe harbors. The second one is fire, casualty, natural disaster. So outside of any of the federally declared disaster areas, there can still be circumstances that arise that prevent you from being able to file, or prevent you from being able to accurately gather the records that you need. So picture a restaurant that burns down through a fire. The office has burned. Paperwork's all gone. So they are going to have a challenging time filing their 1099s and W-2s, and would thus potentially qualify for the manual 8809 through that safe harbor. If the person who's responsible for doing the filing it passes away, has a serious illness, or just for whatever reason they're unavoidably absent, then that is another reason that the business might be unable to resume operations or obtain those necessary records. So those are three of the safe harbors that are applicable for this potential extension. Again, you do have to file it on paper. You got to sign it. You got to send it in. You got to make sure that the IRS approves it. So you want to do it as early as possible. You can do it anytime after January 1st, but you have to do it before the deadline date of January 31st in order for the IRS to consider that. They've got a couple others that are less, probably less pertinent. The first one may be that's businesses that are filing information returns during the first year of their being established. So if you have a client, if you're an accountant, you have a client, or if you are a new business owner, you just started your business in 2018, first, congratulations. But second, you can get an additional 30 days to file your 1099 miscellaneous and your W-2s to the IRS, the Social Security Administration. That's because the IRS does recognize that as a new business person, you can potentially have some sticking points there, just a learning curve, and so they'd be willing to grant that 30-day extension through the manual 8809. The last one is something that came up in comments when, as you probably know, the IRS, whenever they make changes to a form, they open it up for public commentary. And one of the public comments that came back was requesting some time for filers who don't receive timely data on third-party payee statements. That's a mouthful, but it's one of those things that you would probably be working with an accountant to know that it applies to you if it applies to you. There could be sick payments that are coming from a third party. Schedule K1s are something that would be another example that came up in that commentary. But that last one is going to be certainly less obvious or less relevant for most of the participants here. With that, I'm going to flip it back over to Geneva and see if you can do that second survey question for us.
Sure, yeah. Thanks for the information there on the 8809s. We have a quick follow-up poll question on that. Which box is no longer eligible for the 8809 automatic extension? Is that the box 1, box 5, box 7, box 14? Make sure you're pressing that box at the bottom of the poll to send in your vote, and that is how we will know if you have answered the question or not. We're getting a lot of responses in. I just want to give it a couple more seconds here. Okay, I'm going to go ahead and end the voting and share out those results. And it looks like you have all gotten that one right. It is the box 7. So if you've been relying on automatic 30-day extension to get that box 7 non-employee compensation form in the past, just be aware that you won't have that safety net for you this year, and you may need to think about really getting those in a timely manner because you won't have another way to avoid that late filing penalty if you're running a little bit late. Let's turn it back over to Ed now, and we'll get a little bit more information going.
All right, thanks, Geneva. One more thing on the 1099 miscellaneous form. The kind of best practice here is that you should be filing your 1099 miscellaneous box 7s separately from other boxes that you may be filing. So an example would be I have 10 1099 miscellaneous with box 7 amounts in them, and then I've got one that has a box 1 amount for rent. I want to make sure that I file those separately. That's because the box 1 is due on a later date, a later time frame than the box 7 forms are due. The box 7 are due January 31st. The box 1's due March 31st. It will be April 1st this year since March 31st is a Sunday. But the IRS is starting to go through now and kind of look at this a bit more harshly. Let's say, just continuing on with that example, that you're e-filing, and so you are doing it yourself. You're filing to the IRS through the FIRE system, and you submit your box 7s on January 31st. So you've met the deadline. You're great. You're doing good. But you've got some box 1s that you want to file as well. So you're holding on to those, just in case something changes. You have a couple extra months on those since you're e-filing. You don't have to file until March 31st. So you're going to hold on to those and file them later. But then you realize that for some reason you missed a box 7. There's one more that's still out there for a vendor that you just didn't file when you filed everything on January 31st. And you decide, well, I'm just going to put that in there, and I'm going to put all my box 1s. I'm just going to go ahead with my box 1s now and send them all here. It's March 10th. I'm just going to go ahead and send them all. The IRS is going to look at that filing that you do with the one late box 7 and the additional box 1 forms, and they're going to say, well, well, all those are late, even though the box one forms aren't really late because they beat the deadline. It's because you're sending them in together. So the lesson is just keep everything separated there. Keep your box sevens being filed separately from your other boxes. In Tax 1099, we do this automatically, and we have been doing this for the last couple of years. If you have filed with us in the last couple of years, you may have done this where you file some box sevens, you file some box ones, you put them all in at the same time, you submit them all together, and you come out with two different reference numbers. We send you two emails, one that says that you filed two box ones and one that says you filed eight box sevens, and you think, well, why? This is why, because the IRS wants to receive them as separate filings, and so we've known that because we talk to the IRS all the time, and so we've been separating them since the advent of that January 31st filing date. So we've been keeping everything separate ourselves, and we'll continue to do that so that we can help make sure that you're in compliance with this and not getting any additional penalties that you don't want to get. So switching over to state filing a little bit, the combined federal state filing program you may be familiar with. There are about 30 states that participate in the combined federal state filing program, and that's a good program from our perspective. It's a good program from your perspective. If you're an accountant, it's a good program from your client's perspective, because then you just submit everything one time through your e-file. We automatically submit our forms to the combined federal state filing program. The IRS will automatically send those over to the state, and there's just no muss, no fuss. You don't really have to do anything else with that process to have your state filing compliance completed. The problem is that the states, like the IRS, really want to get that information on those filings as fast as they possibly can. And with the combined federal state filing program, they don't get that information until June or July. They get it sometime in the summertime because that's when the IRS is finally able to compile the information, put it into the files that they need to send out to the states, and share that information out with the states. So if you're the state in that scenario, you're looking for a business to file their 1099 forms with you. You're looking to confirm that someone, an employee, a contractor who has requested a refund is legitimately entitled to that refund. And so the state has been sending out letters to businesses, sometimes in March, sometimes in April, saying, "Hey, we didn't get your 1099s. Hey, we didn't get your forms. What's going on?" And we always let our clients know that that's okay. They're going to get it because we participate in the combined federal state filing program. But for some states, it's just been a stumbling block, and so more states have begun to move to direct filing. Some of the prime examples have been going on for a few years now. Pennsylvania, Oregon, Massachusetts went not too long ago. There's another New England state this year. I can't remember if it's Maine or Vermont that has instituted a separate state filing process. So because of that long delay, some of the states are starting to require that you or your client do a filing directly to them. Again, good news is that we can help you with that. We do the direct filing to the states, and we've made some modifications to how that works in Tax 1099 this year. So I'll show you a little bit about that. Talk a little bit about that as we go through Tax 1099 here at the end of the webinar. Just for kind of future expectations, though, I was at the IRS tax forum in Orlando back in September, and they just kind of in a side conversation we were talking about this, and the IRS was had it on their list of things that they would like to do, which is get the information over to the states in a faster manner. Unfortunately, with the IRS's budget and their various priorities that they have, getting the information to the state has not been one of the bigger priorities, and so they don't know when it will come up on their timetable, but they are hoping to be able to work towards that faster in the near future. And I already covered this. So we do track the filing requirements for all the states, so you don't have to, of course, there are some states that have no filing requirements. Those are the easiest ones to work with, Florida and Texas and Washington and so forth. But if there is a filing requirement for your state, then we can automatically identify that based on the residency of the recipient, and we can put that information in for you and have it available for you to file. A quick how-to on filing corrected forms. So the situation here is you've already submitted the filing. So if you've done that via paper, you've already put your stamp on it and sent it out in the mail. If you're doing that through the e-file and you did it in Tax 1099, you scheduled that out. Maybe you scheduled it for January 31st, January 30th to give you a little bit more time to come back in and make some changes. But that date is passed. It's now February, and you've got a box 7 amount that you just found out was wrong. The vendor finally opened their 1099 and said, "Hey, wait a minute, this says $15,000. You paid me $15,000, but 2,000 of it was expense reimbursement. It was for materials. That wasn't supposed to be included in my 1099. It was only supposed to be 13,000 that you actually paid me for services rendered." That's a type 1 correction. It's very easy to fix. If you're doing a paper filing, then you just get another paper form, you check the box at the top, you send the new 1096, you put the right amount in the box, and you send it on its way. If you're doing it through Tax 1099, pretty much the same process, except you don't have to worry about finding a 1096. That's often the problem with paper filing. You run out of those 1096s because you only get a couple of those if you are, say, ordering them from Staples or somewhere like that. In Tax 1099, you still just check the box at the top, but you don't have to worry about having that extra 1096. The other instance where the type 1 occurs would be voiding a form. So a filing either wasn't required or all of the dollars were paid incorrectly or were marked incorrectly in the accounting software. Maybe they were all supposed to be expense reimbursements, but they were marked or coded as 1099 eligible payments. It could also be that the vendor is a C corporation and doesn't need to get a 1099 and just really was adamant about getting that corrected. That's also a box 1. You just put 0 in the box instead of putting in a different dollar figure. The type 2 corrections are where those get a little bit more complicated. The type 2 correction requires actually 2 forms. The scenario here is you filed with incorrect name or with an incorrect tax identification number. That's easy to do, especially if you're collecting handwritten W-9s from vendors. It's easy for them to write illegibly if you're like me, or it's easy for you possibly to misread their handwriting and even transpose some digits without meaning to. All those things are certainly possible. So just imagine a situation where the tax identification number is supposed to end in 89, but it was entered into the accounting software as 98. The first thing you've got to do there is void the form that you already filed that was under the incorrect 10. So I've got to file a corrected form with a $0 amount under the 98 tax identification number. Then I do a new form, a regular form, with the correct tax identification number. So those are 2 important distinctions on the corrections, and we'll take a real quick look at doing that in the software as we get into that at the end of the session. As far as I did see that question in chat there about showing how to do a type 2 correction in Tax 1099, it really is just doing 2 separate forms. So you do the first form, you void that out, and I can show you how to do that. You do that on the incorrect information, so you'll already have that vendor's information there. You submit that. We usually ask that you wait a couple days for that to get accepted by the IRS, and then submit the revised form. If it's a different tax identification number, it's always good just to create a completely separate vendor with that different tax identification number. That way you still got the corrected form, voiding that out under the bad information, and you'll have the new information under the new tax identification number. Geneva, I think we're ready for the next poll question.
Yeah, so this one's about the corrections. If you needed to correct a box amount on a form that you'd already submitted, had already been received by the IRS, what type of correction is that you would need to make to change a dollar amount in a box? Type 1 or type 2? A lot of answers coming in. Thank you so much for your participation in these poll questions. A few still on the way, it looks like. Okay, I'm going to go ahead and end the voting now and share out the results. And it looks like we've got all of these answers correct. It is a type 1 correction you need to make, which is the more simple of the two that Ed had described there. You wouldn't need to create a voided form and then create another form. With this one, you would just submit one corrected form with that correct amount in the box. So thanks everyone for participating in that survey question. I'm going to turn it back over to Ed now for a little bit more information.
All right, thanks, Geneva. So going into form delivery options, you've got kind of what is the standard, your print and mail option, whether you're doing that yourself, you're doing it with us, or if you're a larger entity, maybe you're even hiring that out to a third party to send that through the postal service. In the context of Tax 1099, you get a PDF copy that you can fold and that you can print and fold and mail yourself if you would like to. And then we also offer a service to send that mail out for you. The newer model of sending those forms out is the electronic delivery, and you can do that through either an email or through a portal, just kind of depending on what you have access to. We do offer both in Tax 1099. The email is a password protected PDF. The portal is also password protected. They use the same password for that vendor, and it's unique to the vendor based on the vendor's name and tax identification number, and we provide them instructions on how to do that. A couple things to keep in mind: if you are going to use electronic delivery, the IRS does not mind at all if you use electronic delivery. However, they do want you to obtain permission from the vendors to send that information electronically. So, for example, if you're going to send emails with the forms to your vendors, you want to just solicit from the vendor an acceptance via email, saying yes, I'll take that form through an email. If you're using a portal of some sort, like our portal, then we capture that through the portal itself. We ask the person to opt in or opt out, and then you get a report that says Joe and Sue opted in, but Barbara wants to get a paper form. So you've got access to a report for that. There's a couple of other things that are kind of needing to know on the electronic delivery. You need to make sure that they can download it using PDF if that's how you're providing the form to them. You need to make sure they know how they could change their address and things like that. So there's a couple of other requirements, but the big main one is making sure you have the affirmative opt-in from the vendor in order to send that electronic delivery. Couple of quick little known facts about e-filing, joint submissions. So for paper filing, the IRS really doesn't want to get more than one submission, if you can help it at all, from you for a particular payer or for a particular client. If you're an accountant, they want everything put in together because it's paper and it's hard for them to deal with. That's one of the reasons it takes them so long to get information out to various other parties, like the Social Security Administration, to compare and contrast with what records they have that are coming in from W-2s. They just have a hard time getting that paper into an electronic format, getting it into their databases, and then pushing it out where it needs to go. So for paper, they really ask that you only submit once on paper. Not a problem with e-filing. You could submit as many times as you want to or as you need to. Particularly for accountants, you may be working with clients who they think they've got everything ready on January 15th, and they send it to you, and you say, okay, great, and file the 1099s, and then a week later they turn around and say, oh, I forgot that I wrote a couple more checks, and I need to submit these, and then another couple days later they find some more. So it just kind of trickles in sometimes as you're working with them. And so from an electronic submission standpoint, it doesn't really matter from the IRS. They take that electronically, and so it's really easy for them to work with on the data side. Another benefit of the e-file is that you don't have to have the 1096. I mentioned earlier that if you go to Staples and you buy a box of forms, you're likely going to get, say, 25 forms and 3 1096 inside that box. Well, if you mess up one 1096 and you submitted one 1096, you've only got one left if you need to do a correction. And so if you get a correction in March, but then you get another correction in April, you're missing that 1096 that you need to send with that new correction. So for e-filing, you don't have to worry about that. The 1096 is replaced by the electronic filing, and so it can be a little bit easier for you. On Tax 1099, even if you didn't file the original form through us, if you filed it on paper or you filed it somewhere else, we can do a corrected filing for you. And then separate state filing, again, if you're in a particular state and you're not filing through an electronic platform that participates with combined federal state filing like we do, you may have an obligation to file to a state like California or Maryland. Ordinarily, those would be combined federal state filing program states, but if you're paper filing, you don't get that option. You still have to send something into the state as a separate filing. So just something to consider as you kind of work through that. Again, we will in Tax 1099 be able to take care of the various state filings for you. So we're going to show a few new things in the platform, and then this is just a couple of things on the list here, but I'm going to show you around a few different places. We've got a two-way sync for QuickBooks Online, Xero, and Bill.com that allow you to connect your recipient information back over from Tax 1099 to those services. You may be collecting your W-9s in Tax 1099, using the TIN match to validate the information, make sure that it's correct, that what was provided on the W-9 is correct. Then you can sync that back over to QuickBooks Online, Xero, and Bill.com. We'll even send the PDF copy of that 1099, of that W-9 form for you. In the past, you were not able to block a single form. If you had submitted 10 forms altogether in one reference number, you weren't able to block just one form out of that reference number. And now we are permitting you to do that, to block a single form out of a reference number. And we've got a new notice management feature that's available for our enterprise clients. I'll talk just a little bit about enterprise, but notice management is new in enterprise. The things that have been available in enterprise are these like workflow management and user management. So you can create very specific rights for your users. You can create profiles and assign to those users. Each user gets their own login and password, and then you can track the actions that they take in the system. So you have an audit trail of who did what in the system. So if you're working at an accounting firm that is handling a large number of 1099s, you have multiple people who are involved in that process, enterprise may be something that could help you. And it also includes 250 10 matches with that package. So I'm going to share my screen out. We'll take a moment for that to launch. So give me just a minute while I launch that to share my screen with you, and then I'll walk you through a couple things that are new here in Tax 1099. All right, so I am logged into Tax 1099. I'm on the dashboard, and I am logged in as an enterprise user, so I have an option to add the notice management feature up here. Because I'm as an enterprise user, I've got a couple more options down here at the bottom of my grid that you see here. I have things that I might need to review, or things that have already been reviewed and approved, or things that have been reviewed and rejected or resubmitted for review. If you're on an Essential account or an eFile Plus account, you don't really need to worry about those. You'll be focused on these that are kind of applicable across the board. So I just wanted to point out why you may be seeing some more things that are here that you might not be accustomed to. This is the dashboard we went to last year, and so you can do some different things out here. You can just search for one payer. Now, if you are yourself just a single business owner, then you wouldn't have to worry too much about that. But if you are an accountant or bookkeeper, you might have lots of clients out here, and so you can search by the name. You can search by the tax identification number. Again, if you're an accountant or bookkeeper, you can even search by the client ID if you've added that into your payer fields here. In looking at the dashboard. I'm going to go in real quickly to our people section and look at the recipients. I mentioned just a moment ago about the two-way sync, and I mentioned about collecting W-9s and doing 10 matches in Tax 1099. This is where all that happens. I'm going to actually pull up a different company here. I'm kind of more modeled on an accounting firm. Because I've got multiple payers here in my database, and some of them I have things done in, and some of them I don't. So this one I've got more things done. You can see I've got some 10 matches that have been rejected. I've got some W-9s that have been requested, some that have been completed, and so this is where you can sync that information back to QuickBooks Online, to Bill.com, to Xero. So I can take this particular vendor, I can sync it back to QuickBooks Online, and as long as I have a QuickBooks Online account, it will send that information over, and it will send even this PDF copy and attach it to the vendor record over there in QuickBooks Online. So again, something that's useful if you're using those services for keeping your vendor information in sync. We added this export to Excel for all payers option here as well. If you've been using us for the last few years, you may have a significant amount of information in there now. You might have a lot of payers, you might have a lot of recipients. Even if you only have one company that you're doing this for, you may find this to be an easy method for getting the information out of the system. You select the format that you want to export to. So I'm selecting 1099 miscellaneous. And what that's going to do is it's going to export all of my payers and all of my recipient information into an Excel sheet, and that Excel sheet is going to be formatted exactly the way we would need it in Tax 1099 to import back into Tax 1099. And so it's going to take a moment to download. Whenever I'm screen sharing like this, everything runs a little bit slower. But when I'm able to open that, you'll see the payer information, you'll see the recipient information, and then you'll be able to add the box amount for that particular recipient. You'll be able to just take whatever your amount is for 2018 and put it in there for that recipient. You can add more recipients to the spreadsheet. You can remove recipients from the spreadsheet. You can do all those things as part of the process here. But as Excel opens, here we go. So I've got a variety, as you saw in my account, of different payers. If I move over just a little bit, I've got all of my recipient information over here as well. And then moving over a little bit further, you can see where all the boxes are. So you can, if you're running reports out of a system, if you're just tracking things on Excel, you can do a VLOOKUP in Excel and merge that information in, putting it in the appropriate box that you might need to put that in, and then just turn around into Tax 1099 and use our import for the Excel spreadsheet and import that information right back in. Also, just want to point out the search box here. So I think I've got a Sam in this company. So if I type just in the first couple letters there, I can drill down. I can find the person that I'm looking for, and you'll see those search boxes in multiple different places in the system as I kind of move through the system. The next place I'm going to go into is the Manage Forms. So once you've filed a form, you've submitted it, you've paid for it, they will go over here into the Manage Forms page, and this is where they will live. When this page loads in, you'll load in, whenever you're doing it, it'll load into this Manage Federal Forms tab. That's where you spend most of your time. This is the IRS or the Social Security Administration copies of the forms. And so I'm going to take a look at that same payer that we just looked at a moment ago. I can't remember if I've got anything for 2018. I do. Okay, so you can look here. You can see your forms from years past. I've got some forms out here from 2018 as well as forms for 2015. If I go back there, a couple of things that are different here that weren't in place last year. We've got a box here that will note if you have chosen U.S. postal mailing or emailing, or if you've chosen to have it filed to the state through Tax 1099. One of the issues that came up last year when we were doing our excuse me, our after season debrief was people indicated that they would file. They might select the postal mailing on the way to check out, and then by the time they checked out, they just couldn't remember if they had actually checked that box or not. And going over running the report, we've got a forms delivery report, was just more work than they wanted to do. So they asked if we could put in a sign here that would show that they had selected the mailing. And you'll see that here as soon as you navigate over to this page. Same thing for email. You would have a notation there that I had selected for that email to be sent. On the state filing, you can see I've got one person here that I'm filing to the state of Pennsylvania. You can see what date I submitted that. Was just yesterday. And you can see what date that's scheduled out for. So I can tell that these three are not Box 7 amounts because they're being scheduled out for that later date. For the state filing, it's going to go on the latest date it possibly can go. So it's either going to go on the scheduled date, which in this case is April 1st, or it's going to go on the state's filing deadline, which for Pennsylvania, I believe, is January 31st. And so for this Pennsylvania form, it would go January 31st, even though this was still sitting here for going April 1st to the IRS. And that's just so that you can meet the requirements for the state of Pennsylvania. Another new item that's here this year is state filing. So if I had not chosen to file for my one person who lives in Pennsylvania, as I was going through and doing my federal filing, I can now come in and do that state filing here. So that's another option that is available this year. And as I mentioned, you can come in and you can block a single form out of a submission. So I've got three that are in the same filing here. I can tell that because these are all the same reference number over here. And so I could go in and I could block just the one form out of this option if I wanted to. We've also enabled the ability to unmask those PDFs even after they've been submitted to the IRS. So you can always get a copy with the unmasked PDF. Just as a reminder, our forms at the IRS's recommendation come with only the last four of the tax identification number exposed, just like you see here on the site. On the PDF copy and the mailed copy, it shows that same way. But if you want to unmask those, then it is something that is available for you on a user by user basis. You can do it here. If you have an enterprise account, you can actually go into your profile and you can set that up on the account level to unmask them all as you come in and create them. I actually clicked new form there, didn't mean to, but I'll come back to manage forms in just a moment because I want to show you the state filing piece of it there for just a second. But this is the new form. So if you need to do manual forms, and I know this happens a lot with accountants who are working with clients, their client may have a dozen miscellaneous forms, but they've got one dividend form or one interest form that they're using as they're kind of paying out internal things to partners or investors or what have you. So you can come here and you can do those one-off forms if you want to. This is also where you'd go to do the corrected form filing. So in my corrected form filing, let's say that I had that scenario where I needed to do the type 2 correction. That's going to require me to do two different forms. So what I would do is I would take the first form, I would do the corrected filing, check the box here. I'll do the corrected filing on my first one, pick the payer that that's coming from. I would pick the vendor that had the incorrect information here. So let's say it was Ann Gable. She's got a bad 10. This is the bad 10. It ends in 29. It's supposed to end in 92. I want to zero her form out. So I'm just going to $0 that form out. That's going to void that form. When I save and continue, or save and add U1099 miscellaneous, then the next one I would add another recipient for Ann, do the right social security number or EIN in this case, and re-enter her information to create a separate vendor because there's two different tax identification numbers. I don't want to edit that one and change it. I want to add a new tax identification number, a new recipient in there, and get that second form out the door. Same thing applies though if you're just doing those manual forms. It doesn't have to be a corrected form. You can come in here and do just a manual form using this same process, coming through and making your selections, entering your information. We are, as you'll note, showing the same state for the recipient here. So if my recipient were living in Pennsylvania, then it would show Pennsylvania here, and that box would be checked. Colorado participates in the combined federal state filing program, and so they don't need to have that they need to have that information submitted separately from the standard filing. And now that I showed you that, I'm going to head back over to Manage Forms for just a second and show you under the state filing tab. I mentioned when we first came into this page that it loads into the Manage Federal Forms section. There are two other tabs. There's a Manage State Forms and there's a Manage Reconciliation Forms. The Manage State Forms is where you're going to go to find the direct to state filings. So this is if you have a 1099 miscellaneous or a W-2 and you have filed that to the state of Pennsylvania, for example, is going to show up here for this one that I had filed to the state of Pennsylvania. You'll notice I had four other forms in this year that I filed for this client, but those are going through the combined federal state filing program, or they're going to states that don't require state filing. So those are never going to show up here. This is just for the direct to state filing. And then similarly, I've got the reconciliation forms. If you need to do reconciliation forms, we do offer those, and you can come into Tax1099 and find them here in that reconciliation process. All right, just a quick hitting around a couple of other areas in the system. The imports are still here, same pretty much as they were last year. So we've got some W-2 imports. You can do those through Excel or QuickBooks Desktop or Xero PDFs, and then the kind of the standards as you might look through there. The one thing that's changed here is in QuickBooks Desktop. We wanted to try to give some additional guidance as to what option you should use when you're filing through QuickBooks Desktop. For our accountants who are doing this with 10, 50, 1,000 different clients, they do it day in and day out, and so they don't really need this questionnaire. So they can always opt out and click the exit option and choose the option that they want. But for our clients who maybe only see this once a year, and can't necessarily recall what they did last year, we've created this little wizard that helps you go through and determine what's the best upload method for you. So the first question is going to be, are you using a current version of QuickBooks Desktop? You can say yes or no. If I say no, I'm going to be opted out to use an Excel option for doing this process. If I say yes, I'm going to be asked about using the company, using a firewall inside of a company network, a proxy server. I can still do the plugin if I'm doing one of these things, but our general guidance for people who maybe don't have an IT person on staff is to use the web connector. So if I said yes to that question, it's going to opt me out here to the web connector. When I click OK, it's going to direct me to the QuickBooks Web Connector page. It's going to give me my instructions for doing the download of the web connector and then going through the process of installing the web connector. If I got here though and I said, oh, wait a minute, that's actually not true. That's not what I do. I can come back here, I can click on QuickBooks Desktop, and each time I click here, it's going to reinitiate that wizard process. So again, remember, if you're an accountant, you can just skip past it, click that, and exit. But if you're not, you can come back through this. I'm going to say yes again to that question. This time I'm going to say no to the company network and firewall. The next question is going to ask about hosted environments. If I say yes, I'm going to go out to the web connector again. I'm going to say no. Next question is going to ask if I have administrative privileges on my PC. If I say no, it's going to take me to the web connector. So I'm going to say yes. It's going to ask me if I'm an administrative user in QuickBooks Desktop. Again, if I say no, it's going to take me to the web connector. If I say yes, it's going to ask me, do I have access to the PC or the server where QuickBooks Desktop is installed? And if I say no, it will take me to the web connector. But I'm going to say yes, and it's going to say, okay, well then for you, probably the plugin is going to be the best way to go for doing this process. You click OK, and it's going to take you to the QuickBooks for Windows plugin page, and you'll just download the QuickBooks services and proceed on. If you did this last year, if you downloaded the plugin last year, then you can go in to QuickBooks and I'll actually just update when you try to run the plugin for the first time. The plugin will still be there if you've got the same version of QuickBooks Desktop and you haven't changed anything on your computer. Then the plugin would still be there. You'll just be able to go through and update that. I mentioned the notices feature, so I do have that in my menu option over here. That's again for enterprise clients. It's something you can upgrade to primarily for people who are doing tax type events. And then one more thing under the enterprise option, if I click under my profile, I mentioned setting up the default for the PDFs to be unmasked. So if I do that, if I check this box here, it will unmask all the PDFs for all of my users. I have to do this at the top level, the owner of the account. And then the other thing that account owner can do is set up my Form 1099 miscellaneous box 7s to default to a specific scheduled date for everybody that is entering those forms. And typically that would be the deadline date, January 31st. But up to you what you may want to make that date be. Again, those options will only show if you are participating in the enterprise account. All right, so with that, I've kind of taken you around, shown you a few things there inside of Tax 1099. I'm going to take us back over to our program and turn it over to Geneva for the last survey question and any questions that might have come up.
Yeah, thanks, Ed, for that really great comprehensive tour of Tax 1099. We hope that really helps to refamiliarize everybody with the platform if it's been a year since you've seen it, or if maybe you haven't seen it before. Hopefully you got some information, some good insights out of that. You see the last poll question on your screen: a printer, a secure method of e-delivery, or opt-in from vendors? And after you're answering this question, feel free to type in any questions that you have remaining into that chat box, and we'll try to answer those if we have a second here at the end. And if not, we will be sure to follow up in email with just waiting for a couple some more
Hey, Geneva,
responses
I
here.
think your audio's starting to break up again there. So I think it's chopping in and out. So if you can, if the survey, if people have completed the survey, then maybe you could just show us the results there. And we can see if there's any questions that have come in. I think we so far just had the one question about the type 2 correction that we did. Okay, thanks, Geneva. I see the responses there. So it looks like 63%, which is everybody who responded, chose the right answer, the printer. So good, thank you for that. And Q&A, like Geneva said, if you do have any questions, please just put those into the chat. We will be here for the next couple of minutes to be able to answer those questions that you might have. If you don't have any questions, we will follow up to everyone with an email after the session. It will have the recorded session in it, as well as a printable copy of the PDF that we've been showing out here, and that will be coming out in the next few hours or tomorrow morning, just kind of depending on how the rest of our day goes. But if you don't have any questions, we appreciate you attending our session today, and we'll look forward to hearing from you in the future as you hopefully work with Tax1099. All right, I do have a question that came in. The question is, if we add a recipient in Tax1099 because they had an error in SSN or taxpayer identification number, can we delete the recipient with the incorrect social security number, or do we just need to avoid choosing them in the future? Why is it bad to edit the recipient with the incorrect number? It's not so much that it's bad to edit the person with the incorrect number. It's just that the system can only hold that information in one place at one time. And so if you edit the taxpayer identification number for someone that you found out you had the wrong taxpayer identification number in, you may 3 years down the line not remember that was why you have two forms for that person. So having the separate vendor record in there helps you be able to keep that separate. You can't delete that once you've filed a form. However, you can inactivate the vendor. That's another new thing that we just added this year. It's in the Manage Recipient page, and so you can inactivate that recipient. You can even, after the filing season, change that recipient's name to "Do not use this one." Was wronged in. You can put something in there in the way of a note to yourself in that recipient's name. But just kind of as a best practice, you did file a form under that bad social security number. You filed a corrected form under that bad social security number. Just for record keeping purposes, it's good to keep that bad social security number vendor out there so you have that record in the right place. It's the wrong place, but it's the right place as far as where those forms are actually filed to. Thanks for your question, Thomas. All right, Thomas, and thanks everybody. It's now top of the hour, so we're going to end the session. Thanks for attending, and I hope everyone has a good rest of your day. And again, look forward to hearing from you during the tax season.